another key inflation report. It's due out later today, and it could have a big impact on our bottom line. So after this week's revised GDP showed the strongest quarterly growth in nearly 2 years, all eyes now turn to today's personal consumption expenditures report, the PCE as it's known. This comes from the Bureau of Economic Analysis. Stronger than expected numbers could encourage the Fed to keep key interest rates higher to fight inflation. NewsNation's Alicia Nieves is on Wall Street with all the details on this one. So, Alicia, what will the Fed specifically be looking for out of today's report?
Yeah, good morning, Kelly. I can tell you that the Fed is going to watch this report really closely because it's its favorite gauge for inflation. And that's because PCE is a little better than CPI in that it's more modern and a bit more dynamic in the way that it approaches gathering prices that Americans actually utilize the goods every single day. So it gives a real sense of the price pressure that Americans feel. And we're going to, expect to see that the American person, an average person, had, increased price pressures. That 2.7% would be the overall PCE for the month of August. That would be up from 2.6% in July. And then when you look at core PCE, which excludes the more volatile components of food and energy, and it's things like you just mentioned a moment ago, bathroom vanities and furnitures, that's going to be up even more significantly at 2.9%. Both of these numbers are off from the Fed's target of keeping inflation around 2%, and it shows that we're continuing to head in the wrong direction, albeit kind of a little more steadily and a little more moderate of a pace. A lot of that related to President Trump's tariffs or being attributed to that. So markets ahead of this open a little trepidatious about the number in the report. Markets looking to open mixed with the NASDAQ lower. The S&P 500 has also been dipping in and out of negative and positive territory. But I got to point out, not only will this number have an impact on the Fed's decision when it comes to rates on the stock market today, likely going to have an impact on consumer sentiment. That has been something that is, traditionally volatile, but over the last couple of months has been steadily, trickling downward. You can see on the latter end of the screen here, it peaked the beginning of this year, consumer sentiment, but for lower income households, it's been coming down. And since the summer, we started to see in June, really, higher income households, middle income specifically, start to, cite negative concerns about the economy, saying they're feeling the pinch of the president's agenda, certainly feeling the pinch of prices going up. And that's relatively new, and that has been steadily downward, since June. We've seen it in the latest report, September 15th, with consumer sentiment. So listen, PCE, the number drops at 8:30 this morning. When it drops, if it is better than expected, meaning a lower number, you could see some relief in the stock market and certainly for American consumers. But if it's higher than expected, that portends bad news when it comes to a Fed rate cut, and we could see markets pull back, as well as that stress among consumers continue to elevate, Kelly.
Thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.